Every week, another headline drops about a Forex scam wiping out local investors. If you're a Filipino trader looking at the currency markets, your first reaction is probably to pause and ask, wait, is this even legal here? Let's clear the air right now. If you are an individual trading your own money through a legitimate international broker, Forex trading is completely legal in the Philippines. But there is a catch that causes all the confusion. The Philippine government does not issue specific retail Forex licenses to local brokers. You won't find a single platform legally operating a physical retail Forex shop down the street. To access global currency pairs like the euro or US dollar, you have to cross borders. Filipino traders are required to use offshore brokers regulated in other countries. That creates a hard trade-off. By stepping outside the local financial system, you bypass local investment restrictions, but you also leave behind domestic government protections. Since local law doesn't restrict your right to trade, but also won't bail you out if things go south overseas, absolute responsibility for keeping your capital safe transfers directly to you. Many traders mistakenly think the Bangko Sentral ng Pilipinas is supposed to watch over their trades. The BSP is the guardian of the national economy. Their charter dictates they maintain price stability and the value of our national currency. They oversee banks and manage national reserves, but they do not license or audit the international retail platforms you use to place your trades. Then there's the Securities and Exchange Commission, the SEC. Their mandate focuses strictly on protecting investors from illegal investment schemes happening within the country. When you see an SEC advisory against a Forex company, they are targeting operations actively soliciting funds in the Philippines without a license. They are shutting down local scams, not banning you from opening a legitimate international account. Assuming the SEC or BSP will protect your offshore account is a dangerous miscalculation. They are built to guard the Philippine financial system, not your personal connection to a server in London or Sydney. To navigate this cleanly, look at this decision tree. Anytime you evaluate a Forex opportunity, start with one question. Are they actively soliciting my money here in the Philippines? If the answer is yes, and they don't have an explicit SEC license to take local investments, that is a red flag. It is highly likely an illegal setup, and you should walk away immediately. If the answer is no, meaning you are independently seeking out a broker to fund your own self-directed account, you clear the local legal hurdle. But that immediately brings us to the second filter. Does the platform hold top-tier offshore regulation? If they don't, you are stepping into a void. Unregulated offshore brokers carry severe risks, including manipulated price feeds and the very real chance they simply disappear with your money overnight. If they do hold a top-tier license, you lock in strict financial oversight from a reputable foreign government. Capital safety is achieved by rigorously applying this jurisdictional logic to filter out bad actors, rather than simply avoiding the market entirely. Since we lack a local safety net, we have to rely on the gold standards of international regulation. We are looking for strict authorities like the XCA in the UK, ASIC in Australia, or CISEC in Europe. This chart shows the most critical feature a regulated broker provides: segregated client funds. This requires your money to be kept in a completely different bank account from the broker's own operational cash. If that broker mismanages their business and faces total insolvency, your trading capital remains safely isolated. Their creditors legally cannot touch your vault. Beyond the license and the vault, look for operational transparency. A healthy broker will maintain crystal-clear spread and commission structures, backed by a verifiable track record of at least 5 years. Treat these international regulatory standards as a rigid, uncompromising checklist. It is the only effective way to construct the safety net that our local laws don't provide. If you skip that vetting framework, any assumed security you have will evaporate. Unregulated environments are specifically built to trap yield-seeking traders. The most common trap targeting Filipinos is the guaranteed ROI robot. Scammers sell automated expert advisors by displaying massive profits, but those numbers are derived from heavily manipulated backtesting that fails the moment it hits live markets. Then there is the account manager scheme. This is where a third party online offers to trade your capital for you in exchange for a split of the profits. These setups systematically fail. They typically result in mathematical collapse, reckless over-leveraging that wipes the account, or outright stealing your initial deposit. Any entity promising passive, guaranteed Forex returns in the Philippines is a red flag. It is a psychological trap engineered to bypass your rational vetting process. Once you secure a legitimate broker and generate real returns, you face the final operational reality, managing your obligations with the Bureau of Internal Revenue. Even though your trades execute on international servers, any profit you pull from the global markets and bring back home is legally considered income in the Philippines, making it subject to income tax. Handling this requires strict administrative discipline. You need to keep exact records of all your deposits, withdrawals, and your net profit or loss for every single financial year. Proactive tax compliance creates a clean, auditable paper trail for your offshore income, a strategic necessity if you plan to use that wealth for local investments or loan applications. The reality of Philippine Forex trading is a direct exchange. You trade local handholding for total global market access. It requires rigorous personal oversight. If you are looking for an easy payout with local government protection, this market is not for you. But if you are a diligent, analytical trader ready to self-direct your own risk, the options are there. You know the legal boundaries and the exact standards required. Take control of your capital and apply this framework today by exploring FXNX's institutional-grade, fully regulated trading ecosystem.